Hello. Wow, I saw
Hello.
some joining already. I think we can start now. Good morning to everyone. I saw Chiang, Boon Kiat, GY. Good morning to all. Wow,
Good
all just
morning.
join into
Good morning.
all just joining to
Morning,
listening.
morning.
Yeah, nobody's want to talk.
Okay,
Hey, this is
first thing,
talk sing song. Not so serious one.
noob question. How do you pronounce it? Is it Evergrande or Evergrande?
Yeah. This one is also my struggle at first, when I discuss with
Isn't
my
it
colleagues.
Evergrande? Like a flowers.
Yeah.
Both
Ever
is fine. If you ask Chinese people, they will say 恒大, so they don't give a fuck how you pronounce it in English.
So Hengda
Yeah,
it is then.
actually, some news article, English one is also they just call it like Hengda, Hengda lah. So I saw some of them, but I think the English name is still Evergrande lah. I think most of the agency like those Bloomberg, CNBC, I think they call it Evergrande. Cut
Yeah,
out
I
the
didn't
E.
realize
Mm.
Evergrande is called Hengda. Then when the AA stocks they pop up that they say Hengda has like paid like for the interest for one of the bonds. I was like thinking, is this a subsidiary or what?
Yeah, their subsidiary is called Hengda. Also the property one.
Yeah. So how should we do this discussion? Actually, I don't know. Maybe I'll just pose some question. Anyone want to chip in, just chip in now. Okay. So I think for the benefits of those who didn't follow this topic in details, I think we should start from just briefly describing what is this crisis all about. What actually happened behind this Evergrande crisis. So I'll just throw this question. What is this crisis about? Chiang, you want to explain a bit?
Uh, very long-winded. I think it's like this Evergrande over leverage, and then recently the Chinese government trying to slow down the property sector, so they introduced this three red lines thing. So like all the property companies, they were very aggressive. So now they have to slow down. They have to repay their bonds and stuff like that. So Evergrande is like over leveraged, so they can't. They have to keep on continuing to expand to continue their business. So like once they have to like slow down, so they start to have problems with their stuff. Basically like this.
And that three lines, right? That is something that government came out this year or last year. Just not too long ago, right?
Last year, I think, end of last year.
Yeah. And basically
Last
they
year.
are trying. So they try to cap the I mean there's some measures, right? For example, that their debt. I don't recall what are the details of those three lines. Can you explain a bit? I think there's some cap on their debt.
The cash to short-term debt, and then one is the net gearing, and then one is the liability to asset ratio.
And this morning, I think you shared a picture, right? Actually, Evergrande is not not the only one, because there's another real estate developer also cross three lines.
R&F, but I think Evergrande is the biggest one.
And then others also, there are lists of other developers also. Some cross two lines, some cross one line. So overall, they are all quite leveraged. So actually, this is something that the government try to deleverage the entire sector. So they come up with this. It's just that Evergrande is the largest one, and they have the largest balance sheet. So everyone is looking at them now.
Yeah.
Yeah.
I think they are the most like systematic risk.
Yeah.
Something like that. Yeah.
Yeah. So right now, right, have they defaulted any bonds?
I think right now not yet, because they have 30 days to pay, right?
Because you remember what Monday market was dropped quite a bit, right? And then that was public holiday in China, Monday, Tuesday, and then Wednesday was public holiday in Hong Kong. then we know that they have some loan to some interest to pay on bank loan, I think on Monday.
Yeah.
And then on Thursday there are two coupon payments, right? One is onshore one, Chinese yuan bond. Another one is offshore, those USD bond. I think the onshore one, they have some arrangement. I'm not sure whether they have paid paid the coupons or the interest, but they basically have some arrangement, meaning that it's not default, right? But for the US one, they haven't paid at all, so they are given like 30 days to sort it out, right? And then if after 30 days they haven't paid, then only considered default.
Yeah, I guess so.
Yeah.
I think they'll need to government to do something. I think they're desperately have no cash to pay.
Yeah, run out of cash now. And there are so many protests, right? I mean, coming from those who invested in their wealth management product, and then the suppliers, the homeowners, everyone is protesting now.
Yeah.
I don't see Eddie joining because he's the only one that I mean, I think last week, right? He painted a few scenarios like what is going to happen to Evergrande. I'll just voice up my opinions first. So if you have a view or speculation, please feel free to chip in.
Eddie's
Because
here.
oh, Eddie just joined. Okay, so I'll go first. So I
Yeah.
think even though we look at their market cap, right, in terms of Hong Kong dollar, I think they're still about like 30 billions. It's like looks very small, but then the company's balance sheet is actually very huge. So they have tons of liabilities, 300 billions US dollar magnitude, right? So the balance sheet is definitely very big. And my opinion is that for sure they won't be able to pay off all their debts. So meaning that they in terms of the bonds, I expect that most of them will take a huge haircut now. So the government for sure will try to intervene by forcing them to, like, let's say, complete all the projects and then pay off like their wealth management product. This kind of monies belong to small investors, right? Government will pressure them to pay that first. So I think the institutional investor, in terms of like the bondholders and also the shareholders, I think this will wipe out. I mean, shareholders will wipe out, but bondholders, I think probably they can get back like maybe 40 cents of $1 that on par. So that's my expectations. So I'll see who want to come up with other speculation. Like, what do you expect this will develop in coming months or year even? Eddie, share your view.
Okay, also share mine first.
I mean, I already mentioned in the chat like a few days ago, right? What's gonna happen? So yeah, I mean, it's the way I see it, right? The offshore bondholders can forget about getting the money back. It's quite obvious, right? China will only always take care of its own, its own people. So offshore can expect to get maybe 10 cents at the most. I don't. In fact, even 10 cents is it's a bit of an optimistic stretch. Yeah, I don't even think you get 10 cents back. But then, like I said, right, they only have like 1.4 million uncompleted apartments. So that's not a huge number to absorb. If you think about it, it's not like it's spread in one city. It's spread all over China. So 1.4 million apartments spread all over China, right? Asking the local developers in each city to take over the uncompleted projects is not a big ask. But I'm not sure also like how the payment schemes in China work. Whether is it similar to here in Singapore, where the developers are paid based on percentage of completion, POC. So, but I guess they also roughly have the same, kind of payment schemes in China where developers, get paid based on POC. So those developers who are asked to take on the task of completing the unfinished apartments, right? It's not like they're performing national service or anything like that. They will still get paid, right? They're starting off from say, somewhere in the middle, right, where the apartment is unfinished. They just have to complete it, and then they get paid along the way. So it's not a complete loss for them. Yeah. So I don't see any risk in those apartments being uncompleted. The only okay. So actually this whole chat should not be about Evergrande, but more about what are the expected systemic fallout that we expect from there. So in terms of fallout, right? I don't know. That one is a bit hard for me to predict because the of course credit will start to tighten in China, but at the same time, right? PBOC is flooding the banks with liquidity, right? To make sure that the capital market, the onshore capital market is still well supported. Yeah. So in terms of systemic risk, I think it would be muted lah. That's my gut feel. Yep.
And what I think is, at a broad level, all these moves are actually good for China long term, because even investors in US are saying like they wish the US government could do things like this, because it shouldn't always just be about the investors; it should also be about the normal people. And you're even seeing like companies taking proactive effects, like ByteDance, Douyin saying, okay, we're going to limit Douyin usage to 40 minutes for people below 18 years old, for instance. And I think there's just a more healthy balance between profit maximization and also doing what's right for the people and the users. So that's my take. I think in the long run, that's a good thing for the country.
Yeah, I think CCP will make sure of it, so no worries. small players, small investor, not the shareholders lah. I mean, whoever that have stake in these entire things, right? Especially the small one, I think government will take care lah. Any other views on like speculation? What is going next? If not, we can of course talk about like why people actually describe this as like Lehman Brothers 2.0, right? So I think this is also something that is quite interesting. I don't expect actually like just a specific sector in China have such a big impact to US, right? Like what happened on Monday. But that's also something interesting to talk about.
I think personally, I also didn't pay attention to like how big is the impact of this China market with respect to its impact on the world. Because I think in the past, like we've seen like I think in 2015 or 2013 when I think the China Shanghai market just collapsed, right? The rest of the market, the rest of the world, they just chunk along normally. So, but I think a lot of sometimes these things does change. So I don't have a very good read on this. It's just that I think because the China property market is like a large portion of the GDP. So if let's say I don't know how to pronounce that, Evergrande, right? It's not the only bad house in the neighborhood, right? That means that the rest of them are in a similar state, right? Then this could be a bit of a social or problem on the main street, and that's definitely going to affect the China economy, and that's going to affect consumption in some ways. The government is definitely going to come in with more money, but the change in, I think, the consumer sentiments, right? It might affect other countries who is actually exporting their goods and services to over there, which will affect the earnings of other countries. But I think because they are such a large consumer, this could be the probable residual effect.
Sorry if I'm in here. Actually, I'm follow more closely on the China market lah. So I mean I talk about general China. Actually, if you all did you all notice that this is more like a China CCP induced kind of event? Let's put it this way lah. Evergrande or Evergrande problem isn't happened just like yesterday. means their balance sheet unhealthy since like I don't know 5 years back, already unhealthy. But this round also because of COVID, everything, etc., it's like a kind of like orchestrated, also induced kind of event. Means suddenly it become a very big problem. I mean, it has always been a big problem, but now only this round it makes into headline. And then speaking of to add on at what just now you mentioned is that actually to put this simple is that if you all notice this is a series of events. China now not only they want a 2-child, they want a 3-child policy because they notice there's a big social problem already lah per se. Their population is gonna turn older, and then but people are not willing to give birth to more child. I have China friend, they said raising a kids in like Shanghai and what it's gonna cost them more than just I don't know how many millions. I also don't know how to calculate already. So now the three pillars that is how to say falling on the big burden on the younger generation is housing, then the housing cost, then the educational cost, and then the medical for the old. So these three is the sector that we have seen gonna press also lah. Kind of started off with the education sector, then you say cannot go tuition class, yada yada, all those kind of things. Actually, it's real expensive. I mean, you just simply Google what are the pricing they charging before this, and then you have one kid's also enough to kill you already. Imagine you have 3 kids, and then like it or not, it's very competitive there lah. So they will kiasu kiasi also they have to send. Then how really cannot afford ma? I mean that is the reality lah. And then the housing is fucking expensive. So I mean these are the problem that already around for a long time, but this round is kind of like CCP induced to do something about it lah. So but yeah, I wasn't sure this one will turn into out of control or not eventually, like for the Evergrande issue. But yeah, I mean to me, my view is that this one is a induced one. They are turning more. If you notice, it's a series of policy being announced, how they want to tackle this sector, tackle that sector, but all are moving into the same thing. They are trying to really reduce the cost. They are trying to get people to give more birth. Hey, now they even ban the kids from doing this, doing that. So you japa and you nothing to do. Then what you do? You
Make humans.
yeah, you make babies lah. I mean, it's not a good way to say, but kind of logical also, right? In a way, yeah. Yep. Okay, that's my view. Yep.
Yeah, thanks a lot. I think you brought up a very good point. Like this is actually what the CCP want, and what they want is actually to lowering the cost of living, right? Especially cost of housing. So they don't want houses to keep escalate because higher house price will definitely make it more burdensome, right? But I think from control perspective, I don't think CCP want to like crash the market, right? Because when something is free falling, it's very hard to to save the market. You better make it like a soft landing, like control the prices. So I think this is something that they plan to do. It's just that sometimes the market reaction, by market I mean the real estate market reaction. Sometimes it can drop a lot faster and might become a crisis now. Because I think the way we see houses, right, it's not just like place to stay, because in China, I think quite a huge populations there actually use house as like just treat it like a store of capital, right? That's their assets, right? So not only for stay, they actually buy more and more houses, and then because of that, when they run out of land in like cities, they actually build a lot of apartments in those rural places. And that's why all this like ghost town, this kind of stories, I think it's not new also. It is, I think probably in the last 10 years already can see this problem become larger and larger. And I think this problem of like affecting the GDP is also quite, it's real, right? This is not specific to China, it's everywhere, it's the same. I myself observed that when I bought apartment in Singapore here, I actually spent a lot more, right, in terms of other like furniture, all these things. And then that's true for the entire economy as well. So if, for example, like if Evergrande, they have to like fire sale, right? Whether it's like half complete project or whatever it is, if they really fire sale and then the entire prices of the entire housing drop, right? Then people will just hold on to the purchase, right? Because if you see things, the houses are dropping, why are you still eager to buy now, right? You just wait a couple months, then everyone is waiting, nobody's buying, then you will just keep on like spiral downwards, right? So this is definitely something that the CCP want to avoid now. Yeah, that is my view on the on that. And then before we talk about the Evergrande, also have you guys? I'm just curious. Have you guys really worry about the ghost town? First, do you know about that? And is that a concern? Because I remember that was my concern like maybe 3 or 5 years ago when I look at some videos, documentaries saying that they built like thousands and thousands of projects, and then basically nobody is staying there, right? So it become like really become so-called ghost town. So anyone pay attention to this area? Any view on this?
I think the ghost town a few years back was in Shenyang, and then lately I read some news is that they're demolishing already. They're demolishing a few buildings in Yunnan province. I don't know what they are gonna do about it. I forgot already. I just read the headline, but I think this is part of the ongoing process also. If it become a ghost town, if it's almost complete or just complete or whatever, if they see no value, they just demolish it and then they do something about it again. Yeah, I mean that is some of the headlines that I read only. Yeah. To worry or not, I think if they embark on this road, there'll be more to come lah. If you say few years back when it first surfaced, then yes lah. But like I say, actually same to the Evergrande issue. It has been around only. It's just this round someone go and poke it lah. I mean CCP go and poke it, make it a big fuss then only people more attention only Else it's like it's not it's like like I said, it has always been there lah. So not to say super worry lah, but what I worry most is that the things will turn out worse than what CCP expected. Means it didn't follow the plan. Yeah. So that is more of a should worry lah. Yep.
Actually, can I find out, right? How did they poke this Evergrande thing? Because
I don't recall they
because I didn't.
I also don't recall they poke. It's more about,
It's about defaulting,
making sure-
right? It's about potential default, right? If I'm right, it's a normal
correct.
like bond
the thing is,
phenomenon, right?
the company don't have money to pay. They don't have money to pay. Period.
Let me explain a bit.
One of those companies that are like those tech companies that are impacted by the regulatory crackdown.
Yeah, I chew in a bit here. So actually, their problem is since the beginning, right? They always borrowed money for their projects, and on their debt, right? They are actually keep rolling it. So you imagine that they take money from the homeowners, they take the money from banks, and then they just develop their projects and then just keep on rolling the same thing and again, right? So I think one key is that they have to be able to access to the capital in order to make these things keep running, because they still need to pay their supplier and so on. And the things that pop them, I think, is the three red lines. So basically, based on their leverage ratio, they are actually not able to access to the capital. And when banks notice that they are not allowed to continue borrowing, right? Then they also kind of like worried now, so they don't want to extend the loan, or they might extend it at a much higher financing cost, and that actually caused the recent problems. This actually started last year. So like the problem of over leverage, right? Those are like it's already in there for many years, but the popping, I think, is just recent. Like the three red lines things.
Hello, hi. Maybe I just add on a bit. So basically there was the three lines. Then after that there was the lack of access to the bank loans because of the three lines. Then also because they spend too much on their like Evergrande water, Evergrande vehicle, and their football team, stuff like that. Then I think the killing thing was probably they actually started having a lot of discounts because they wanted the cash flow back. So eventually all of these add up together, then everyone knew that they were not selling well. So because of that, then the whole sector suffered, and of course with all the regulations kicking in, it was not possible for them to get the cash flow back. So then more and more people started to say they are doing very badly and it spread. Yeah.
The selling of houses, the selling of houses, you said at discount, right? Those are when is it like? Is it like last year or very recent?
I think they have always been known to be selling at a discount. Even at last year, they were also selling at discount, but they claim that they were only selling at rural areas and the discount wasn't big, stuff like that. But I think it wasn't very true. So from how we can see it now, it doesn't seem true. Yeah.
So I think the next part I would like to talk a bit is like the contagion. So I don't know how to bring this because actually for me personally, I'm more interested in terms of like would it impact the entire economy? Because to me, if this is still within real estate sector, then shouldn't be a big problem because I personally don't have exposure. I don't think you guys have a lot of real estate exposure to China. So first thing is, will it spread to the entire economy within China? And then second thing is, will it spread outside of China to the global markets? So any view on this?
Yeah, maybe I start first. So I think for China itself, right, my view is that I think growth will definitely be affected because now because like housing is actually part of the wealth. So if generally the housing prices go down, then most people's wealth will be somewhat affected. So I would foresee probably some growth will be affected in some industries. Maybe the more luxury industries will be related. But for I think outside of China, I think it's going to define how you see junk bonds and maybe Asian high yield bonds. Because the China property bonds are always known to be Asian high yield and some of them are known to be junk bonds. I mean, Evergrande bonds are always known to be junk bonds, but there are some bonds in the Asian property market, like the China property market, right? They're actually high yield, but they're not junk. So maybe people will start to see them as junk now. So they have to look for alternatives to fit the bill. And for the property market itself in China, I think whether there's a bailout or not by CCP towards Evergrande, I think there'll be more restrictions coming. So because property groups are actually known to be very good dividend players, like those listed in Hong Kong, like they're actually giving very good dividends. So I'm not very sure if there'll be more restrictions in the future, like, oh, you can't pay dividends because your balance sheet is very bad and stuff like that. So maybe they'll add it on to it. Yeah.
I have not much views on this area, but I think like I said before that already, China is a different market lah. Like if let's say if you take out the control of the centralized government in other countries, right, this will definitely affect the consumption in some ways lah. The thing is, China's control is quite different, so the degrees of the effect would be rather different. Yeah.
Different in terms of like better or worse?
I think it might be better. Might be better. Like the way they can exercise their monetary policy and ask some of the better companies to actually take care of some to absorb some of the bad debts and all. They can do this kind of thing. Other countries, it's a bit of a struggle. It's either nationalized or not. So and because they have a better control about things, right? Some of these things eventually will get done. For the whether it's pushing the cans down the road or not, it's a different thing altogether. I think prior to this situation, it was more on Huarong, and Huarong long time ago is an entity that is created to absorb all these bad debts to restructure them. So they emerged from this, from those situations, and eventually was able to like try to grow a normal business. But apparently recently it didn't it didn't work out that way lah. So I guess it's also how it affects the external, and that to me is like, I don't want to read too much into it, because like I'm not sure about the impact and all that. I think Xiao Boy did bring up like, in terms of the investors, the local investors, it would depend on whether you have bond exposure or potential bond exposure to that China region, because it what we're not say what I'm seeing in my day job, but because we don't actively recommend high yield bonds to clients, so there is less of an issue. But I can imagine that those firms that where the advisors are recommending, the advisors or private bankers are recommending this to them, I think the clients will be checking with them, are they exposed? And even if, let's say, they're not exposed to Evergrande bonds, right, having a large China allocation there is that level of uncertainty. So in a certain sense, there's a reason for the high yield. There's going to be some uncertainty there. As to whether the rest of the bonds are affected or not, we're not sure about that. But it's definitely going to affect, there's going to be a certain market impact, meaning to say, like, if let's say I'm a fund manager and I want to like reduce my uncertainty in this area, so I'm going to sell some China bonds, corporate bonds that is not Evergrande. The price that I'm going to get now, I think, is going to be very different from like about a few months ago. So definitely those portfolios is going to get affected. So in terms of, I think, the yield spread, right, I think the global high yield bonds yield spread, right, it's still very tight, meaning to say like that versus, I think, the risk free, or let's say the corporate, is still very tight. But I think the Asian one is spreading out already. So usually it's spread out, there's more uncertainty, there's also more, there's certainly a opportunity of to actually buy. Like if you, let's say, you buy it as a cohort.
Which tie back to
So
the.
what do you mean by buy it as a cohort? What does buy as a cohort mean?
Buy as a portfolio lah.
I think that ties
What's
back
your
nicely
view on
to the.
Asia high yield? I mean, you mentioned global high yield, but what's your view on Asia high yield?
Asian high yield, it's risky lah, but usually quantitatively, if let's say the yield spread is high, there is value there, provided the default rate is actually in control. But I think we'll rather be buying this when the yield spread is actually higher than when the yield spread is very tight most of the time.
Actually, I wonder for Asia high yield, right?
Into Asia high yield. Yeah. So just started the DCA recently. So yeah.
Okay, thanks for sharing. Yeah, Bunty, you were saying?
Yeah. Keith, just curious. Asia high yield, right? Actually, what is the roughly what is the sector breakdown? Like I don't expect real estate take up like a lot of this how to say, a huge allocation, right? I believe banks or financial sector is still should be the largest one, right? But they are kind of tied to real estate as well. But I don't expect these two like added up like very huge allocation. Do you know roughly the allocation?
I haven't take a look, but you give me some time. Let me see whether I can pull something up.
Okay, thank you. And then I was just saying that this tied back well to the topic of today's discussion, the opportunity part, because you mentioned that this is also like opportunity. So my next question is, I mean, given what we have seen, right, including like what happens on Monday, like these VIX can goes up so much, right, in both global market as well, not just Hong Kong and China. And then different asset classes also affected differently. And bear in mind that this is just like maybe we're seeing like just first part of the entire episodes, right? We still don't know how this thing will develop. So I'm just curious and just want to hear your views. I mean, if anyone want to contribute, how would you take advantage on event or situation like this?
Hey, Bunti, I got the data already. Maybe
Yeah,
I
you can
a
share.
bit.
You can share. You can
Okay,
share either in the chat group or actually you can try share screen if you want. I
yeah, I try
think
share screen.
can. Yeah.
Okay, you can see or not? Okay, so I don't have a certain bond index, but essentially, I think if you look at the iShares Asian high yield bonds, right, that should give you a certain like idea, like what's the composition of things lah. So so the geographical breakdown is probably 41%, China, then the rest is India and all. But if we look at sector, you can imagine that this is the breakdown. If you look at China, they have some sort of breakdown that is somewhat like this. So it's more of the financial sectors. Strangely, I'm not sure whether they break down into property sector or not, because like looks quite okay if it's based on this.
I think the financial sector, right? You know, like all those banks, probably huge proportion of them actually are mortgages. So if, for example, like what happened to, you know, Lehman Brothers, right? If the financial institution are down, right? Like houses are down, right? Then I think the entire financial sector will be affected. So I think that's the risk. It's not 100% direct in terms of like you are not owning property developers debt, but you are actually exposed to banks that exposed to mortgages, and that mortgages exposed to real estate. So this thing can crash also.
Okay. Now I need to learn how to unshare this one. How to unshare? Stop sharing. Okay, can.
I think I was looking at some of the bad performance of the Asian high yield unit trust, right? I think they had about like 40 to 50% exposure to China real estate. Yeah.
Sorry, which specific unit trust got 40 to 50% exposure to China real estate? Do you recall?
The United Asian High Yield and the Alliance Dynamic Asian High Yield Bond. Yeah.
Oh, okay, thanks.
So no one is taking advantage, like buying certain sector, buying certain. I mean, at least take advantage on the VIX, anything like that.
I am.
Yeah.
I mentioned just now. I'm like buying a little bit of unit trust in Asian high yield.
And what's your plan? Like you buy now, expecting if after these things cool down, and then you just
I don't really have a plan, but I just buy because I noticed the price drop a bit, so I thought okay, not too bad, so I just buy yeah.
Is that the one same as Keith is sharing? Is that the same? I mean like same index not necessarily the same
I can't recall. I bought there was one HSBC Asia High Yield. Yeah. It's a unit trust. Yeah.
Thanks.
Bunti, I downloaded the holdings for the index maybe I share a bit I don't know what is what but maybe if you look through, right, you can have a certain idea like what is these things are. You can see my screen, right? So
Can see.
Yeah, so these are I filtered all by these are I think the companies with the high yield bonds. So I slowly scroll out. You see whether how many property and all. This is Lenovo, China Evergrande Group. Is Sunex China also a property? Well Hope Development sounds like a property company. Fortune Star sounds like a property company. Yuzhou Properties. This one sounds like a property company. Huarong Finance. Wanda Properties. Quite small the holdings. Huaneng is not. Yeah, so I I don't think these are the actual bond holdings. I think it's just the companies with exposure there. That's all. So looks okay.
No, I was checking the price. Is this the one 09P, right? This is the ticker, right?
Yeah.
Okay. I was looking at the price from end of May until now. It dropped by 10%. Also, I don't think 10% is a lot. Maybe this is just
10% is not a
started,
lot.
Yeah.
10% is not a lot. The high yield bonds, right? When I was crunching the data last time, not too long ago, I think Asian high yield or global high yields, right? They have a risk profile as a balanced portfolio. So 10% is like almost there. So most of the time you should expect a 10%. But if this is more like considered, this is like more of a crisis kind of situation, right? Then maybe it touches, it is more, it's more uncommon. So maybe a sensible volatility should be maybe minus 14%, minus 14, minus 15%, possibly. So that maybe will be something closer to 2 standard deviations. So yeah, that's my thoughts. And share.
6% trailing yield. So you're getting 6% dividend yield for a duration of about 3.2 years. So if we work backward, the credit spread has increased about 300 basis point now, or 3%. 3% times 3, about 10%. So not like how to say, the 10% drop, right? It's not like 2 standard deviation, but it's also something that is also significant. Don't say like this is normal volatility. For sure it is not. And the ETF price, right, since 2012 until now, is like flat to down a little bit. So what it means is that if you own this Asian high yield ETF for, let's say, 8 or 9 years, then you are not getting any capital appreciations. You're only getting the dividend yield, which is for now is like 6%. Maybe back then, if you bought at a different time point, it will be slightly different. Any other ideas on like how to take advantage? I haven't heard anyone say they are like try to time the VIX, because like if Monday VIX spike up, just sell some put option and then get some good return, right? And anyone doing that? Okay, good. No one is doing that. All long-term investor here. Keith, just now you mentioned about. Oh, Saboy, you want to say something?
Yeah, I wanted to say, right, I think maybe for the Hong Kong market itself, it's a bit hard to take advantage because you have so many things happening on the same time, and Evergrande is just one of the things. So yeah, like every day, like things like Tencent, Alibaba, they just get cheaper, and then you're like, okay, so is this part of the Evergrande effect, or is this like the next crackdown target, or is this like, I don't know, is there something happening again, or did they just flout some new rules that just was set up like maybe last month or something? So kind of be like, I think if I buy now, it's going to be lower again. But I think if you are looking for bargains, I think maybe in the property sector, if it drops even more, there might be bargains, because eventually there'll be some companies that survive, and even those like property management companies, they're still net cash. And even, for example, Country Garden Services, they actually did a 20 PE acquisition recently of the Guangzhou R&F, their services. So I think it shows that they're not actually cash strapped in that sector itself. Yeah.
Saboy, do you have any view, like let's say we try to, I mean, this is more like a really value pick, right? You say the property sector's low PE, net cash, sounds like we try to buy it very cheap. How does this compare to like buying Alibaba? Because Alibaba also like fundamentally quite strong. It's just the political issues that cause the share price drop so much, right? How would you assess their relative value?
I think when you look at it, right, it's very different, because property management sector is a sector that is actually there are a lot of players like property development as well. There are a lot of there are a lot of players, so it's not like a monopoly or duopoly or anything. So it's just about whether you can have synergy within you and your parent, and whether you can do your property management well, such that you actually make the staff cost not as high, and you make use of tech to make you manage the place better, so that you can have more earnings and you can have more people on board on your system, or they use your app, etc. But when you look at Alibaba itself, it's more like a story, and it's more like a growth story. It's more like of you believe in whatever it does and whatever value it brings to the society, such that it's a very big company, and that's why I think it's a very different view because when you look at Alibaba, people will think of it as a tech already. But when you look at property management, people see it like semi-tech, semi-property. So wherever property is affected, you'll get affected as well. If tech is affected, you will get affected as well. So I think it's just people are happy to see that for property management sectors, they've been doing very good growth. Like a lot of companies they're doing like 40 to 80% of revenue and net profit growth. But the question is, okay, so you have done well this time. Is it going to continue? If it continues, then it'll get cheaper and cheaper. But if it continues, then how does it continue? By like financed by debt, like acquisitions, or is it because innately you do well? Because eventually nobody knows when it will come where people start changing their property management providers lah, because they might not be happy with some of the services. So I think that's the key risk. Yeah.
And where is the source of growth for these property management companies? Are they like really consolidating and becoming more and more efficient, or is it like just a business that continue generating nice profit margin cash flow? How will you describe? Because I personally don't know that much on these sectors. I know you guys discuss a lot about this, but please share a bit more.
Okay, so there are a few avenues of, I would say, growth. The first one is the most obvious, is the acquisition. So you actually acquire another property management service company. So it could be either commercial or retail. So I mean, as in housing, sorry, not retail, but housing, like residential. So the residential margins are definitely lower than the commercial. The commercial can grow about gross margin maybe about 30+%, but I would say the residential ones is about 10 plus, 20 plus. So you actually have the value added segment, which is something that a lot of companies are looking to seek growth in, which is like some of them is like the renovation services, some of them are like the property agency services, some of them are like the so when the delivery come, then they help you do the last mile delivery, like send to your house, etc. Some of them you can use the app to order, and then they'll actually send to your house, because the app is by the property developer, as in the property management service themselves. So that's second way of growth. This then the last way is probably just acquiring more like project management contracts lah. It's not really a contract on the balance sheet, but it's more like a relationship lah. So probably you have like those very small developer, right? They'll develop the property, but then they'll be like, oh, I don't want to manage it because I think it's a very losing money business, and a lot of in the starting stages, a lot of property management companies, right, their projects are actually not profitable because they don't have the scale. So they'll probably like, okay, we just give it to a big one. Maybe we just give it to Evergrande Services or Country Garden Services. If they want to take it, then we just let them manage it, so that we can just like shake our hands off, and we can focus on developing the next project, so that we don't have to keep managing this property. Yeah.
Sounds to me like they are similar to, let's say if I make some comparison, right? Similar to REITs in Singapore, but it's just that the REITs, they take out the asset parts. They don't own the assets. They just do the upgrading or the services part, right? And then they add a little bit of tech. so at least that's my interpretation. Please correct me if you don't think I describe it well.
I think REITs themselves, they have the overall decision making. They can think that, oh, okay, for example, if Bedok Point is not doing well, I can think of making it into another place. Or if North Point, I think I need to extend three more wings or something, I can do it. But for property management, they can't do it because the owners are not them. So they also can't raise prices as they want because it's government regulated, and you have to wait for the government regulations to tell you whether you can negotiate the price or whether you can raise the price. Or you must show that you got value in managing the property before you can raise the price. Because I've seen some examples, it's like, so they actually have like old residential areas, and they actually from the government so they actually took over those projects, right? If they show that they can manage well, right, then they can actually change the rate to a higher rate. So it's fairly different.
Sounds more like facilities management, right?
More like what? Sorry?
Sounds more like facilities management.
Yeah, that as well. But of course, they add
It's more
different things.
services.
Yeah, they add different things into different property management service company. So you actually have to see the revenue, whether what they include. Because from company to company, it's very different. Some have property agency, some don't have as well. So yeah.
Can you share like one or two of your top pick within this sector? I'm very curious because I think the best way to understand this is to look at one or two examples. And this is the area that I'm totally haven't paid attention to. And maybe just name one. Which company should I look into?
Okay, I think top pick. I don't have a top pick, but I will probably say I'll go if you want a safer pick. It's probably Country Garden Services. Yeah, that's probably the market leader right now. It's probably the safer pick. So if you want a riskier pick, then it's probably like Evergrande Services because you're betting that it's going to get sold, and because there's been previous cases of property management services company already been sold, so yeah, betting that it could be sold. But I think for myself, I just pick a small cap like a Central China New Life because for me, I think that they're still very cash rich lah. So I will just wait and see how they use the cash lah. I think ultimately the reason for me is to continue holding is just whether I see how they use the cash lor. Because if they use the cash to a very bad use, right, then you're just gonna devalue the stock very fast because your ROE is very high currently. So your existing money, right, the ROE must be good. If it's bad, right, then people will be like, okay, you deserve a very bad PE and stuff like that. Yeah.
Just now you mentioned the Evergrande service, right? Are they like majorly owned by Evergrande Holding, like the parent?
I think they spin off already, so they are not considered, I guess. Yeah, but I
So
think
like most related.
I would say they are related, as in the parent company relation lah. But I don't think they are part of the Evergrande balance sheet lah. Part of the balance sheet, what is left is probably the vehicle segment. Yeah, and of course, they are actually quite well ranked as well in the property management service industry lah. So you'll be a surprise to see if it doesn't get sold or something like that.
Xiao boy, that's CC New Life, right? 9983, right?
Yeah, Hayden's favorite 9983.
Okay.
I don't have any more questions there. Because actually the other one, if you can sidetrack a bit, I'm interested to hear a bit on the Huarong because Huarong, I recall there's some problem and then they already resolved it, right? Keith, do you know the details of that? Can you explain a bit?
Hey, my brain is a bit stuck right now. I'm supposed to know this. But let me see whether I can recall. Give me a while.
While waiting for Keith, the rest, if you have any questions, please just unmute and just speak. And or if you want to type, you can also type in the chat. I can read it out.
I think if I remember, it's almost the same situation. It's just like whether you're able to pay the bond or not pay the bond. So it's really I think a cash flow issue, but the origination reason might be slightly different. So what happens is I think Huarong's bonds are also quite popular among Asian investors, Asian fund managers. So back then, I think it's because a lot of, all the robos, right? They all have their cash management portfolios. And those cash management portfolios are essentially short-term bonds, very short-term bonds that is going to mature maybe in the next 1 year or even shorter, or maybe it's 2 years. So if let's say the bonds don't default and then the yields are good, and then if it's denominated in Singapore dollars, right? Those are very, very attractive. So essentially, when all these things starts happening, there's a cloud of uncertainty whether they are able to pay the bonds or not. And if they cannot pay the interest, they are in default. Then some of these funds, right, they have to mark to market. So I guess almost all the robos, right? All the robos, they invest in this Lion Global Enhanced Liquidity Fund, which is quite high yield, considered a short duration of within 1 year. So the good thing about the Lion Global Enhanced Liquidity is that they don't mark to market, meaning you say you don't see that volatility happening in the unit trust price. So it gives people that peace of mind. But imagine if, let's say, that Huarong defaults, right? Then they have to mark to market. So prices would have to go negative. So when it comes to, I think this saga eventually gets resolved, but how it actually gets resolved, whether it gets paid or not, I can't recall off my head, because I think back then when we were fighting fire, it's more of seeing, like, do we have exposure? Do we have exposure? And I guess that's the mindset that you have if, let's say, you're a high yield in investor or high yield bond managers. You're like always assessing when all this kind of contagion takes place. What's the exposure? Is there gonna be like who's the counterparty? Are the counterparties going to be okay? And whether this becomes a contagion, is it that a bigger part of these China bonds are going to be a problem? Is our fund having large exposure to it? What are we gonna do about it? Are we gonna buy more, or are we going to hold? So I guess I was like too busy with that. Then after a while, we realized that after that, probably we have less exposure about it. Then I totally forget about it. Yeah, but I think some here might remember like what happened after or this Huarong saga.
I recall that right now, right, this Huarong is owned like 100% owned by the Ministry of Finance of China, right? I don't know before that, was it like 100% owned or not? This one I'm not too sure, but if it is 100% owned by government, I think many people are not expecting it to default now, because even though technically, how to say, when they default, it's this Huarong entity that is defaulting, right? But then who's the parent, right? The parent is the government. So it will actually hurt their reputation a lot, the government reputation, if they just the default. But in the end, I recall that there's no default at all. But the chairman of Huarong was sentenced to death, right? I think that was already happened.
I think that was before that. I think that was
okay.
before that, if I remember. So before that happened, then after that it starts becoming more distressed, if I remember. Give me a second. Yeah, I think the chairman was executed like in Jan 2021, and then we're talking about this one in the middle of 2021. So I guess for a lot of these things, it is like this. It's a little bit, not sure whether it's right for me to say it's something similar to the SIA situation. Maybe SIA to a lesser extent, that there is a cloud of uncertainty whether this company can actually pay off or not. And then usually I think the bond yields, there's uncertainty, the yield, there's risk, then the yield spread starts expanding and all that. And maybe some of the bonds going to default, some of them most of them they're okay. So it's an opportunity there. But if you're supposed to, if you wish to pick individual high yield bonds, right, then you have to do individual assessment already, or like whether these bonds, what's the how what's the expected return, like based on probability of happening, then what is your payoff and all. I think in a certain sense, like the bond markets can be quite smart, like in terms of like some of the people that I listen to, and even I think the research from Dimensional, where usually these bonds, whether it's high yield or not, right, they rating agencies do like try to rank these bonds based on their credit rating, and a lot of times we'll be wondering like whether how good is this credit rating. So for a lot of people, what those in the know, what they observe is that for most of the issues, right, I think the credit agency gets it pretty well, which means that if let's say they downgrade a certain bond, their credit rating, right, it more or less means that, not say more or less, there's a high likelihood that means that the fundamentals have deteriorated. That's why their ratings is actually lower. But there's also other ways to actually detect whether these ratings, whether these bonds, the risk of defaulting is actually higher, and that's in the price movement. So this is something Dimensional have done the research on, and in a certain way, if let's say the bond markets are efficient, which they highly believe so, that means that if you start seeing, let's say, before all these things, if let's say no smoke and all that, you see the bond prices starts taking a dive closer to another band of bond ratings, then there is a likelihood that the price is that telling you that some deterioration happening. Yeah, so there's some thoughts about the credit markets from what I understand.
Yeah. Thanks a lot for sharing this, because I'm very curious on this Huarong, because I think this is like the recent episode, like event related to bond sell off, and then talk about all this default, right? And I saw this one line which I put a snapshot in the group chat as well. It just said, to reduce the risk of market contagion and to stabilize its cash flow, Chinese regulators asked Chinese banks to provide loans to China Huarong. So I'm wondering whether, because we were talking about this Evergrande, right? So this could be the way if the Chinese regulator, they don't have to really use their own cash to inject into Evergrande. They just need to ask someone else, whether it's local government or some Chinese banks, then the problem will be solved also. It's not a problem of whether they have the capacity, it's just whether they have the willingness or not. So I think maybe we can learn a bit from here. But also bear in mind that this is this Huarong is government-owned entity, but the Evergrande is a private entity. So there's also some differences. But I understood that Evergrande founder, the chairman, Xu Jiaying, right? I think he's having good relationship with Chinese politician. So that one also probably can help a bit. Anyway, we will follow the development. I think we are still early. Probably think this will actually ease off, or maybe it will come back again when they miss the next coupon payments. Okay, I think I don't have any more questions. Just open to the floor. Anyone have any questions? Yeah.
Eddie, you have something to say just now?
No, actually, I wanted to say that just now when Bunty said good relations with politicians, I wouldn't count too much on that. Seriously.
Okay. To be prudent, we shouldn't count on that now. But Eddie, you are having exposure. I don't have.
Sorry, I didn't catch your question.
Keep you're saying something.
No, I think Eddie missed your last part.
Okay.
Your
I,
last part.
I was saying that Eddie, you said we shouldn't count too much on the relationship with the politician, right? Then I said it should be
Yeah, correct.
yes, that should be the case. But actually, in terms of positioning, I'm more prudent than you because I don't have exposure. You already have some exposure in Asian high yield. But I think your confidence is not on the relationship, right? It's on other maybe fundamentals, other fundamentals, right?
Yeah, correct. So the thing is that I'm also hoping for the price to drop more, then I can buy more.
Nice.
I think Bunti, what you posted is a little bit like the uniqueness of the China markets that we talk about, that they're able to do some of these things, and it sort of like colors how we look at some of these China state-owned companies, or in our equivalent case, something like state-linked companies, like our Temasek-linked companies like that. I think for a long while, one of the value plays among, I think, global fund managers is China Mobile, because it's got a.
For me, creativity starts with what ifs. Like, what if there's fire?
Sorry, give me a second. Yeah, so for China Mobile, it has always been like some kind of value play, because it's like it's one of the dominant telecom players in China, and then the balance sheet is like a lot of cash lah. But in a certain sense, like there is always that overhang that in the case of, let's say, this situation, this Evergrande situation, right? It's not impossible for the China government to ask them to take on some of these debts. So this is something to think about when investing in some of these kind of China state-owned companies. We're not saying that it will definitely happen, but it has happened in the past. So that has to bake into some of our own theses.
Yeah, need to be expert in politics as well, not just fundamental analysis. and specifically China politics, not just US politics. It's not useful at all. Cannot apply. Totally different. Any other comment or questions? If not, maybe we will close the call soon. Lunchtime soon. All right. No more questions. I think that's all for today. And hope you guys have a great lunch. Enjoy your lunch. Thanks a lot. Bye bye.
Okay, bye.